Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, everyone. Ira Epstein of Linn & Associates with your financial market update for this Tuesday, the 25th of April, 2017 afternoon. Markets are already closed. And as you can see, another monster rally. It's a bit of everything. It's the idea that we're going to get a tax idea plan tomorrow. It's the idea that Trump did deliver on. He's going to put a tariff on Canadian imports. It's an idea here that corporate earnings didn't just miss. They went over the top in many of big American companies, and that's going to be good. We have some GDP numbers coming out, and instead of a loss for a quarter, the market's anticipating a 1% gain. I can go on and on. The question is, does the market get ahead of itself? And we have to ask that. Dollar down again at the expense of the euro and the pound. The yen today, we're watching again. The gold, the yen, the bonds and the notes giving back as the market takes on the risk-on mentality. They want to own stocks and so on. So as we look now at the mini S&P, you've had a nice rally. You haven't gone up for a new high over the 2400 level. You're knocking on the door. We'll see if they can do it on the weekly chart. The daily chart back up here, as you can see, to 2385 on a closing basis. So we've come up 60 points in very, very short order. And for the week, it's hard to believe for the week we're only up, well, for the day we're up 15. For the week, we're up 37. It seems, and I realize it's only Tuesday. I feel like I've been at work for a week. Now the question is this. There's a gap on the chart. You can go back on charts and do your work. It's rare that you leave gaps. So this is one of two things. This could be a breakaway gap, and should the market gap up in the next day or so and run to the upside and not fill it, that'd be called what? Breakaway, runaway gap. Doesn't have that yet. If the market falls down, when you have a gap on a chart, it's where it fills it. So it would be the high of this day right here. And if we come to that day, that high is 2358 and a quarter. Might be a number you want to just look at as a technician. Does it have to fill it? No, but if it does, that's typically what chartists look for. In the swing line study, you have higher lows, higher highs. You have a bull market until you take out 2340.50, which would break that pattern of higher lows and higher highs. You're over the 18-day average, which was the fighting zone. Look at that, how often it was being hit day after day. Now the question is, where might resistance come in? Yesterday we went to the upper Bollinger Band. We're pushing on it today. So the market is now trying to push that band higher. Does it work or not? We'll find out in a minute here. You'll be shocked when you see the VIX in a second. You're overbought in an uptrend above the upper Bollinger Band. Unless this market gets a flow of extremely bullish news right here, the word is caution, any way you want to cut it. Same in the Dow. Trend up, market overbought, higher lows, higher highs over the upper Bollinger Band. How often do you stay over the upper Bollinger Band? 5% of the time. And a rule of thumb that I use is each day that it does, it counts as one of those percent if they're in succession. So that's one of the things you can look at. NASDAQ, this is the poster child. This is all a base now in this market. And this is where the strength is. So what my guess is what's going on is those that are buying are probably buying in this and maybe the Russell, which is all of a sudden come alive with it, overbought. So we have a pretty common thing. We're overbought in all the stock indices, which you'd expect after the massive two-day gain. Now here's what I was saying to you. You went and you spent, if you consider 1, 2, 3, 4 days in a row up and over the upper Bollinger Band. When it came down with a vengeance. The first stopping spot, if you come back here, was the 18-day average of closes. Let me come back one day. You watch this reversal. It's unbelievable. This was the breakaway yesterday. Where did you go to today? The lower Bollinger Band went through it by one tick, came back, rallied 50 points off of it, and you're oversold. This is, in theory, where the market should find its legs. We'll see if that's the case. In the bonds, lower highs, lower lows, a close under the 18-day average. Everything turned bearish today. Even momentum is pointing down. Until you take out 154.24, everything's still bearish. When you're looking at the 10-year notes, similar pattern. Could be a little more bearish of a chart even if the market takes out this today's low. Then you could say that you have a high with a lower low, a lower high, lower low, and momentum turning down. Not quite the same type of risk as in the bond market. Dollar index. Now you've got 2 days in a row, if I'm correct, under the lower Bollinger Band in an oversold condition. Gives you about a 3% chance tomorrow of staying under it. Got it? Euro currency. 2 days in a row up and over the upper Bollinger Band, which means about 3% chance, if each day counts as 1 percentage point, of staying over it. Why do I pick that? Well, my studies, and I do go back and do them, 5 is the most common stretched out number you get. So my rule of thumb doesn't mean there's any science that you want to put behind it, as each one of the days when they're in succession is one of those percentage points, and you're overbought. So just a word of caution. Doesn't mean you're going to get a change of trend out of this, but the markets could pull back. I hate when I see this action in a slow stochastic that refuses to embed and stays overbought in a sideways pattern. Doesn't mean it can't go higher. It often, though, leads to a correction, so be aware of that. What's the trend? Clearly to the upside, higher lows. What you'd have to be worried about is taking out 127.76, which is about 70 points away. It's not that far, but the overbought part of the market's a bit scary. And when looking at the yen, look at how they've suddenly turned this yen down. Lower highs, lower lows, under the 18-day average, momentum pointing down. If the market wants to extend this break, you might be headed to the lower Bollinger Band of 89.42. If that were to be taken out, maybe the 100-day average. Where's the resistance? Back up at the 18-day average. What number should not be taken out? In the next 2 trading sessions, if the downtrend's going to stay in place, and I assume it will, 91.44 is the number. So it's areas that I think the pros will look at. Crude oil, we just got the API numbers. Forget all the numbers except gasoline. Another build of 4 million plus gallons. Market was not looking for that. Gasoline prices dropped rather sharply late in the day. You went down to the lower Bollinger Band, found some footing there. So in no time at all, you've gone from high to low. And as I said, while you're showing this market up, the last quotes were nothing like that. These are settlement prices, so be a little careful about what you see in the gasoline. Tonight you'll see a clearer picture when it reopens. Nat gas, trend down, riding the lower Bollinger Band, but oversold. So we have markets that are extremes at all places, and that is the fear that you should have in the market. You've had such a good move in this market since the French election, and then everything else happening. Got to be careful. Let me tell you what I'd like to give you, if you haven't tried it before. It's up to you. I'd like to give you 20-day access, that's business days, to my market research. You're going to see me lose. I guarantee it. You're going to see me have winners. I guarantee that too. It's hard to say both, but in a 20-day period, I will have a winner. I will have losers. It's that simple. That's just the way it goes. When I start this off in the mornings, at 8:30 in the morning, I record my computer screen and orally give you a bunch of trade ideas that the pros are doing. At nighttime, at 8 at night, I write an update, get it out to you, and again in the morning at 11:30 a.m. And these are central daylight times. I'm putting out buy and sell recommendations. Got that? That doesn't mean anything other than I'm going to put out where to buy, where to get out of that trade, my stop order on the trade, and then I give you all the reasons for it in that morning video. It's a pretty cool way to keep up with the market. What am I trying to really do? I'm not trying to be right or wrong. I'm trying to give you trade ideas. And from those ideas, let's assume you wanted to do something and maybe you needed a nudge in that way. That's what we're trying to accomplish for you. So how do you get this 20-day access? Call us, 866-973-2077. You can go to our website at www.iraepstein.com. Another popular way is under this video, you see a link, click it. It'll take you right to the page to sign up for all of our free offerings. And of course, if you're watching me on YouTube feeds, you'll see an icon here. Click that icon. It too will open up everything you need. I'm Ira. You have a great day, and I'll see you all tomorrow.